Hey, what's going on, everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, this is one of my two buy videos that I do every week. And in the first part of the week, what I do is I deposit $100 and then I let M1 do the picking. And what I mean by that is I have auto invest set up on M1, and then wherever we have an underweighted portion of the portfolio, which looks like right here the ETFs is underweighted and then dividend portfolio is overweighted. We have an underweight over here on 12 more dividends. So that's where that's going to go. We also had some major dividends that rolled in from BST. So what I did was too, as I adjusted my portfolio and where the next dividends go, the dividend handling, I changed that. And right now it's custom. I'm dripping all of my dividends except for three. And I am taking the dividends from the ETFs, which are SCHD and BST, and I am just putting those into the general as cash, and it's going to auto invest that, as well as Nvidia. But Nvidia pays hardly any dividend at all. Right now it's 40 cents, so I can't even reinvest that 40 cents into Nvidia anyway, so it's just going to be handled as cash. So let's just look at the portfolio, and if you're interested to see what I hold in the portfolio, I'll leave a link below. But this portfolio is, of course, it's generating dividends, but I also have investments in here, so the portfolio value will also increase over time as well. I just don't want high dividend payers. I want stocks that appreciate in value over time, nice growing companies that pay a growing dividend over time and very safe dividends, so I can rely on this income to retire early. So what we're looking at right now, this is my taxable M1 stock brokerage account, my average Joe dividends portfolio. And this portfolio is only 15% of my current net worth. Right around the time of COVID, I decided I wanted more of a revenue stream or income stream to bolster my life and pay for it. So rather than relying on when I can retire in an up market, I want to be able to retire when I want to, on my own terms, when I have enough passive income. So that's the purpose of this portfolio right here. And we can see that it's had good returns. And we can see I started slowly here, and right about here, I started ramping it up right about the time of COVID. And then I had some equity in a home I no longer own, so I put it to work in this portfolio. But you can see here, it was not even at the $200,000 mark here, and we've just gone up pretty much ever since, with a couple of little hiccups here and there, but that's just normal market volatility. And we'll look at over the last year, we've had a money weighted return of nearly 15% at 14.98%, and so I'm happy with the returns of this portfolio, which are pretty much following the stock market, so no surprises there. But this portfolio is returning a much higher dividend yield than, say, a total stock market index like a VTI, VTSAX, or VOO. And that's why I'm doing this. And also, it's returning better returns than like an SCHD because I have growth in it as well. And so it's paying about the same return as like an SCHD, but it's appreciating faster than SCHD. So we can look at the last month. We're pretty flat, up 0.82%, and then we're down over the last week. And then today we had some news on some tariffs. It looks like Trump is going to pull back the Mexico tariff, at least for a month. And to me, this is all noise and news, and it gave me a buying opportunity this morning. So let's take a look at the activity log. We'll see what I bought. But before we get to that, there were a couple dividends that rolled in, and here's the BST dividend that rolled in this weekend, $503.25. This is a monthly pair, and I get this dividend every single month, and it's going up because I'm reinvesting those dividends. But in this case, what I'm doing is I'm reinvesting it back in the portfolio. So we'll see if these go up at all, see if we bought any BST. And then JP Morgan, another dividend, and this one's going to be dripped in to right back into JP Morgan. Remember, the only ones that are not going to drip now are BST and SCHD. but I imagine those are going to probably wind up dripping back into themselves, at least partially anyway. And I want to use those as kind of a way to kind of rebalance the portfolio and keep everything, on target that way. So there were three buys, and of course, one of those buys is going to be the JP Morgan dividend drip. And so, looks like with the dividends that were paid from BST, $404.97 of it went back into BST, and that purchased an additional 10.87459 shares of BST. And BST, that pays 25 cents per share. So I can tell right off the bat, I'm going to get over $2.50 more in monthly additional income just with that partial drip. But we see where the other portion of the money went to. JP Morgan, again, that's the dividend drip. And we're going to see how the next dividends are going to go up for these three, and as well as my monthly average dividend income and quarterly and annual for this portfolio, And then Nvidia is where it went into, and BST actually has Nvidia as one of the main investments as a covered call option to produce income. So when Nvidia goes down, BST goes down with it. There's a lot of tech in there. So let's click and see what we bought of Nvidia. Bought 1.74687 of a share of Nvidia, and Nvidia pays hardly any dividends, so it's not really going to move the needle for my dividends there, but this is helping with the growth. Nvidia's growth has been explosive for me. Is it going to be that way in the future? I don't know, but I've made like 8-9 times my investment with Nvidia, and right now they're kind of the top dog with like chips and AI, so I don't think they're going anywhere. There was some news about I think it was DeepSeek or something like that. It was a Chinese AI company, and I think that's just going to be a temporary blip for them. So let's go on over to my Google Docs spreadsheet, because we have to update this sheet with the new values of shares. And it's also going to update the average share price, number of shares, and the cost basis for those three positions where I bought more shares. Again, the BST, JP Morgan, and Nvidia. So the sheet, it shows all the positions in my portfolio. There are currently 52, and right now they are arranged by pay date right here. You can see that. So we're in a brand new month, and what I've done is the next dividend over here, actually the current dividend for Nvidia is 40 cents. We may see this go up to probably 41 cents. It's going to add an additional penny, because here's the quarterly dividend for Nvidia. It's 1 cent per share. So I'm going to get like 1.7 cents is going to be added. It may round it up to 42 cents. We'll see what happens there. And we're going to see the JP Morgan, the next dividend, go up by just a little bit, because we're only investing $8.40 into JP Morgan. And then we're getting that, I believe it was 10 shares or so of BST. Yeah, 10.87 shares of BST. We're going to see that go up as well. That next dividend is going to go up, and we're buying before the ex-dividend date, which is usually in the middle of the month, right around here. So we're going to sneak in and beat that and get a higher dividend for BST. And also I have the cash flow averages tracked here. The current monthly cash flow of this portfolio is $1,036.98. Here's the quarterly. Annual is at, it's over $12,400. We're going to see this go up, and it's going to change it right over here. So I'm going to grab some data from M1. We're going to go to that portfolio tab, actually the holdings tab, and I'm going to grab all the data starting with the name column. I'm going to show you how I update the sheet just by grabbing this data and doing a simple paste. And by using VLOOKUPs on the sheet, I got tired of typing in the information manually. And so I found a way, I created a way of just grabbing the data from M1, going to creating a M1 data tab right here, and then aligning the shares, cost basis, and average for each of the positions. What I do is I paste special the data from M1, and it puts it all in the A column. And then the B, C, and D column, I'm just lining up the Again, the shares cost basis and average for each position. You can see SCHD. We didn't buy any more shares, but BSD we sure did. And I should change the format on this because the shares are, they're not in dollars, they're just in units. But it's no big deal. It doesn't hurt my data at all. But so I pasted that in, and we're going to see the change over here in the dividend portfolio tab. And we're going to go through those changes one by one. And we'll see first off with NVIDIA. Remember, the old dividend was a whole 40 cents for NVIDIA, and now it's going to be a whole 42 cents in the end of March when NVIDIA will announce their next dividend. But look at NVIDIA, what this stock has done for me. And current share price, here's my average. It was like 13 and change was my average before this purchase. It's gone up because I bought these shares at $116-ish, right around there. Here's my current shares for NVIDIA. And so, but it's a very small multiplier, the shares times that 1 cent dividend. But the last time NVIDIA raised their dividend, I think it was like we can see the percentage because I track it. They increased their dividend by 150%. Will NVIDIA keep doing that year over year? I don't know. But I'm guessing, it's at least I'm speculating that NVIDIA is going to pay more dividends over time. They're going to share those profits with us, shareholders. So right now it pays a minuscule 0.03%. Look at my yield on cost, still low at 0.22%. But my point is, this has been a real grower for me, and I think it will turn into a income play over time, maybe over the next decade or two. So let's scroll down and we'll take a look at JP Morgan. Remember that dividend drip moving from 840, and it'll be 844, and that's going to be at the end of April. I'll get 844 instead. So, and then here we can see the BST dividend, well, the $400 plus that went into there. Remember, this was not a dividend drip. It just happened to be a BST. It was underweighted along with NVIDIA. So that's where the money went. So the next dividend for BST is going to move from 503 and a quarter to 505.97. So you see that go up. And then let's take a look at the change in the monthly cash flow average. I look at this as like a monthly paycheck for the portfolio. Of course, it's not an even 1,000. Well, it was 1,036.98. This is an average. I have to take the quarterly and divide it by 3 because the first 2 months of dividends I received are lower amounts than the last month of each quarter. Right over here in the dark green, the March, June, September, December, that's my big pairs. And so I have to do is I have to take the quarterly, divide it by 3, and we get the average. Now I like to track that instead of having to go up and down like crazy. I want to measure the progress and not measure these wild swings, because it's just I am making progress, but this is more of a smoother, more of a linear increase for me, and I just decided to express it this way. So we can see the quarterly right here, and here is the annual. You can see how it's gone up to 1,039.72 for monthly. The quarterly has moved up to 31.19.17, and then you can see the annual. It's moved up dollars in this, and same with the quarterly as well. It's more significant, up to 12,476.67. So what we're going to do is we're going to take the monthly cash flow average. We're going to put that on the monthly average dividend tracking tab. So 1,039.72. We're going to scroll all the way to the bottom of this sheet and put that 1,039.72. And what I do is I track every event that happens within this portfolio, whether it's a buy, a sell, deposits into here. There's dividend increases. Look at Black Hills, that 4% dividend increase. Kimberly-Clark. You can see all these dividend raises. These are not by me putting money into the portfolio. It's just these companies raising their dividends year over year and increasing. But just this event, BST, JP Morgan, dividend drip, and the $100 deposit. And so $2.74 added to my monthly income. So I'm receiving an additional $2.74 every single month going forward, tomorrow I'm going to have an event that I've already put in here. I've roughed it in for the 4th. And that event is going to be the Verizon dividend drip. Let's go back to the dividend portfolio tab and I'll show you what I mean. I'm going to wake up tomorrow morning to a dividend from Verizon. And let's go ahead and take a look and see. Excuse me, I had a cough there. What the dividend is going to be. I'll show you how I can check it. Dividend portfolio. We'll go to Verizon and we'll look at the 1 month view, and it should show the next dividend that I'm due. And see right there, dividends earned for Verizon. So that's 60.86. So it is correct. Sometimes there's a little bit of a disconnect because maybe I've bought fractional shares after the ex-dividend date, but that was not the case with Verizon. So tomorrow I'm going to wake up, have $60.86 just appear in my account. It's a great feeling that I don't get sick of seeing those dividends. So what I'm going to do is I'm going to add that 60.86. What I do is I log here are all the dividends I've received from Verizon. So there's the last one right there, and you can see how these are going up. Here's my first dividend from Verizon, and these are in quarterly increments. So every 3 months, pretty much you can count back and see how these dividends have gone up in value. So we're in the 60s, and we were in the 40s back here, in the 30s, and just below $10. So it's getting aggressive there, and kicked up my shares of Verizon. You can see most of my gains are really because of the dividends. Because look at the current share price. If Verizon didn't pay a dividend, I would be at a loss here, because the dividends have actually helped the gain or loss. Without that, I would have a loss with Verizon. But I do have a 10% gain, and anything above 25% or above is in the green there. And then anything 5% above in yield or yield on my cost, that's in green. And then any dividends that are above the $10 mark are in green. So like Digital Realty, that one's getting close to becoming one of the green ones. And then also we went over, the last increase. So most of my dividend paying stocks in here, which are, well, they all pay a dividend, they raise their dividend each and every year, except for Digital Realty. It's been a little while. And Oracle's like every 2 years. And O actually increases their dividend multiple times per year. So let's go on to the dividend tracker tab. And on this tab, I track the dividend portfolio value. I kind of close it out every month, rounded to the nearest $100. And then I put in the total dividends that were paid to me. And then you can see here I also track the quarterly dividends, the quarter-on-quarter increase, and then the increase in dollars. Here's the annual dividends we can see from 2021 to 2022 to 2023 to 2024. And then here's the average monthly dividend tracked here, my monthly paycheck. And then we can see the progress now. We're just in, the 3rd day of February. I've already added an additional $274 of dividend income from the portfolio, just with what we've done with the BST, with that dividend, what we did with that, and JP Morgan as well. So that's a month-over-month gain of the monthly dividends of 0.26%. And then here's the annual. You can see how it's gone up. And we're up to 12,476.67. We've added annual dividends of 32.91. And again, this is just for that month. And then I had a $100 deposit there. And you can see just over the last, ever since I made the large deposits, to bolster the portfolio, we can see just over the last couple years, what I've put in on the average, I've averaged less than $1,000 per month of deposits. So, and eventually I'm going to have to pull back on the reins a little bit, because this portfolio is becoming, I don't want to say a liability, but at least it's a little bit of a burden as far as taxes, because I'm going to be paying probably for 2025, over $12,000 in taxes are going to have to pay, not that amount. I'm going to be taxed on that amount. Of course, it's going to be favorable. Dividends are taxed favorably, so it's not going to be a high percentage, but still I have to pay taxes on this. But I'm going to have to start either slowing down deposits on this or start pulling back dividends to pay for the tax liability on the portfolio. So we'll see. And I'm getting pretty close to where I'm going to actually start using these dividends within probably the next year or two. We'll see how that goes. But let's close out the video with my total net worth statement here. And like I said, the M1 portfolio, this is 15% of my current net worth. So at 275, it's about 15%. Let's go take a look and see what I'm invested in elsewhere. Over at Vanguard, I have IRAs, I have a taxable brokerage account, and you can see they're just in boring ETFs. And I recommend you build up a fortress of ETFs before you start getting into individual stock investing like I'm doing. It's just my advice of what I would do. Of course, you shouldn't take that. You should do your own research. And also, if you are carrying debt, you have credit card debt, anything like that, pay it off first. Don't do any investing. I know some people will tell you you should just do both. I disagree. I think you should get rid of your bad debt, like credit cards. Pay it off immediately. It's guaranteed returns on that high interest. So over at Vanguard, $479,000. Over there, $103,000 with my current employer 401k. And then here I have an IRA with prior employment to my current employer at $712K. Here's the dividend portfolio that we went into at length. Here's my 1-year emergency fund over at M1, 6-month emergency fund over at Synchrony, and here is my 2-month cushion over at Capital One. And then here's the value of my home. Here is my only debt that I have. And I think there's no such thing as good debt in my book, and people will disagree. But I think even having mortgage debt is not very good debt at all. So I'm going to pay that off. But that's my only debt. I don't have student loans, credit card debt, or anything like that. Before I had it when I was much younger, paid it off, and stayed out of that debt. I've had car loans before. I drive a 2013 Honda Civic Si, completely paid for. It was long paid for. I think I took a loan on it initially when it was bought in I bought it like in November or December 2012. I took a loan on it because a Honda was offering like 0.9% interest, and I could make more money. I thought, just investing at that point, and that's what I did. And then I realized, I just want to get rid of the payments. They were low because I had a good trade in on it, but paid it off I think like 2 years into that loan, and haven't had a car payment since. And it's a really great feeling. That car has been just phenomenal for me. I've had like nothing break on it. I've just had simple maintenance items on it, and I only have 55,000 miles on a 2013 car. But I'm thinking about maybe a project car. Who knows? Because I actually like working on cars, and this Honda has kept me bored a little bit because it won't break. So here's my total net worth. So subtracting out what I have outstanding on the mortgage. So earlier this morning I was below the 1.8 mark. We're just above it, but who knows? It keeps swinging with news. It keeps going up and down, But and that's why I want to concentrate on income, because it doesn't matter what my net worth is swinging to. If I have enough income from my investments, it doesn't matter. I don't have to sell it at a loss or anything like that. I can just draw dividends, and I can retain all the shares. And we can see here's my average monthly dividend. This is including interest in savings accounts. And look at that number. I think a lot of people could survive off that. I know I could easily survive off this once my mortgage is paid off. So, and I'm not done investing, so this number is going to be a lot larger by the time I have access to my IRA and my IRAs and 401k, that this number is going to be way higher than this. So I'm not going to have to worry about selling shares or cutting back because the market has dipped, because I'm invested in stocks that are they're reliable dividend payers. And one of the rules I have too is if a company, if they suspend their dividend or if they cut it, part of my strategy is I will sell them. I will get rid of them. There are companies like Coke, Pepsi, Home Depot. They will pay, they have paid for decades, and they won't stop. So even if you hold like ETFs like SCHD, VTI, VU, those pay a dividend as well, and you'd have to have every single company within those indexes cut their dividend to get zero dividends from them. So I'm not too worried about that. So that's all I had to show you guys for this video, the buys. And again, I did a little bit of change up of what I did with the BST dividend. Normally, I would have put in the whole amount, the dividend that was received for BST. That 503.25 would have rolled right into BST. JP Morgan, that went into JP Morgan, but I wanted to rebalance the portfolio. We could see NVIDIA became underweighted, and I'm glad I bought that because I've got some growth in there as well, a little bit diversified. So I get a lot of money from BST anyway. I don't want BST to be the chunk. It seems like it's the biggest chunk of my payments month after month. I don't have a huge problem with that, but I'd like some others to do a little bit more of the lifting in here. We can see what the forecast is for the dividends. You can see BST is just huge. That's just a huge chunk. Verizon's pretty good. We have another good one from AbbVie, but we have a lot of little smaller ones. I like to see these ones kind of grow and get bigger and do some of the lifting for me. So thanks again, everyone, for sticking to the end of the video. Please click the like button. That's a great way to support me and the channel. I'm not trying to sell you guys anything. I'm never going to have merch. I'm never going to try to just live off of this channel. I just do this to show you guys and just show you what I'm doing and maybe inspire somebody who's younger too, especially, who sees this at like 20, 21 years old and starts right away and builds a dividend portfolio that gives them the freedom to do whatever they want in like 10 years. I mean, think about that. I wish I would have started back when I was right out of college and done that and built up an income stream like that, along with, of course, investing in my 401k, at least up to the company match, things like that. But anyway, I could go on forever about finance and everything, but I won't. But again, please click the like button. Also subscribe so you do not miss future videos. My next video will be my next buy that will be at the end of this week. I'll deposit $100, and the difference will be I'll pick 5 stocks, so $20 a piece, into each of those stocks. Thanks again, everyone. I hope you have a great week.